Hello everyone, I'm Kunal Sodhani from Shinhan Bank India Global Trading Center, and we are here with another episode of understanding what's happening on the domestic front as well as what's happening around the globe. So first talking about the CPI data which India had. So we came in at around 3.54%, which is the lowest level since August 2019. Also, the good part was the food inflation, which was a major concern, has dipped down to around 5.5%, which was around 9.3% in the last figure. In fact, also the other thing is the monsoon sessions have been decent enough, and I think that is one of the reasons where we have seen the food inflation taking lower. To the anticipation from several economists had been even below the lower number of 3.54%, but still I think it's still in the comfort zone of the RBI band, so it's nothing to worry on the inflationary part. So the comfort band around 2 to 6% is what we were eyeing, and we are at 3.5%. On the other hand, we also have the IIP data. We saw IIP data coming around 4.2%. Mining and power sectors had outperformed, but manufacturing data, that part or the manufacturing sector was a bit low to the tune of 2.5%, where it was around 3.5% in the same period a year ago. So I think manufacturing took a hit, but rest mining and power sectors did well. Also on the FX reserves front, we are at all-time high levels of around $675 billion. Definitely covering the external debt is one of the reasons what RBI eyes. Also, secondly, is the import cover which we are having due to any kind of uncertainties that may prevail in case of any geopolitical risk. But if you're talking about the geopolitical risk, yes, these geopolitical risk or news feeds from the Iran-Israel front are giving some risk on risk of move in the market also. So if we talk about the FPI flows for India, it came in around negative 15,000 crores for the month of August till date. While if you talk about the debt flows, they have been decent to around 7,000 crores of positive flows on the debt side. But these geopolitical reasons, they do create some jittery into the market, which cannot be ignored. So I think an eye has to be kept. Also, if you see the Brent crude prices after these feeds from the geopolitical front has bounced back from around $75 per barrel to around $82 per barrel. So I think this is a decent bounce in the oil prices, where some kind of nervousness in the markets have been seen. If you talk about the Fed trajectory and the data points, they are indicating 100% probability of a Fed rate cut in September to the tune of 25 basis point. And around 30 to 40% are also eyeing there can be a 50 basis point cut also. But our personal take remains of 25 basis point at this point in time, considering the tone of the Fed speakers. If we talk about the Eurozone and the GBP, that is a UK front, nothing major from that perspective, but dollar index is something which needs to be watched out, where 102.20 acts as a very important support, while 104 half acts as a very important resistance. For dollar rupee pair, what we are eyeing is a range bound session once again, though as we discussed in our earlier sessions, where the dollar rupee has having a range shift. So earlier from 83.50 to 83.70 and then 83.70 to 83.90, and now I think the range shift is there around 83.80 to 84 big figure. But in case if the big figure breaks, I think the NDF highs of 84.14 may be tested. So that's the tradable levels on the NDF front. While on the other hand, we need a closing below 83.80 to have that consolidation phase to continue. So that's all from my side, friends. Thank you so much for your time. Hope you find our video very much insightful. Thank you. Thank you all.